Today I will discuss question 3 of assignment 3 with you in detail. Before I deal with the question, I would like to point out certain aspects that you need to take note of. Before you attempt the question, please read the required section carefully and make sure you understand exactly what you should answer. Plan your answer appropriately by adopting the following approach. Identify the taxpayer in the question correctly. Draw a timeline to represent the year of assessment. I will explain what the timeline is when I deal with the question. Read each section of the question carefully and give special attention to dates, amounts, and the other parties involved in the particular tax transaction. Take care not to exceed the time allocation for the question. It's important not to go beyond the time allocated, otherwise you're going to use time of the next question. Start to answer your question in a structured approach. Once you have dealt with a specific tax issue or a transaction, tick it off as done and move on to the next issue or transaction. Once you have completed your answer, make sure you have addressed each section of the question. And most importantly, remember to start each question on a new page. I will now proceed with the question and deal with that accordingly. You will note that my question has been highlighted. As I've said, we will start with reading the required section first. Now, the required section in question 3 stipulates the following. Calculate, I have highlighted the word calculate, the taxable income, that's important, of lazy age, my taxpayer in question for the year of assessment ended when 28 February 2014. And very important, the note below, ignore any capital gains implications, tax implications. So you need not to worry about that. The important thing is, in the first 2 paragraphs, you will find most of the information that you will require for the purpose of this question. Let's go and read through that. Lazy Age CC is a small business corporation as defined and carries on the business of a cosmetic product manufacturer. You will note I have highlighted Lazy Age, small business corporation, and the cosmetic product manufacturer. The close corporation operates mainly in Johannesburg and sells most of its cosmetic products on credit to retailers in South Africa. It has only one member, I have highlighted that, and the lady is Jenny Levine. Then it stipulates the following information is provided to you for the close corporation's year of assessment ended 28 February 2014. There's a lot of information contained in the first 2 paragraphs. Now, just to simplify the information, I've drawn a little diagram for you, and I will explain it as part of my planning of answering the question. All I've done, I have drawn a diagram of all the information provided within that first 2 paragraphs to me. First of all, I've identified my taxpayer called Lazy Age CC. It's got one member, Jenny Levine. She's got 100% membership interest. The year end is 28 February 2014. In the first paragraph, it was stipulated that Lazy Age CC is a small business corporation. And apart from that, it's also a manufacturer. Being a small business corporation, I immediately know I have to apply section 12E, which is a special tax dispensation for my small business corporations. Being a manufacturer, there's 100% deductions for manufacturing equipment, which will be bought during the year of assessment and brought into use. So, manufacturer, 100%. All my non-manufacturing assets will be depreciated on the basis of 50% in year 1, 30% in year 2, and 20% in year 3 with no apportionment. Other than that, I need to address some gross income issues and my typical deductions. A general deduction, special deduction, capital allowances, and donations. You don't need to follow this approach. What's important for me is that you have a structured approach in dealing with your question. This will assist you in planning your answer. If you fail to plan, there might be a good opportunity not to pass a particular question. Now let's go back to our question. For the purpose of the exercise of working through the question, I will use notes, or numbers rather, to place them in my suggested answer. Let's go and read the first information that's provided. In note 1, it stipulates their sales on cash and on credit. Now remember that all forms part of the gross income of the entity. So let's proceed with the answer. I'll just move this aside and I'll start answering the question the way that you should do it in your exam paper. I will write their sales, and the first one is cash, and the amount is 450,000 Rand. Please note that I've got 2 columns. There's a specific reason for that. The first column you will use as your calculation column, and the last column is my final column. In other words, I'm going to do the tax calculation for the company. So there's my sales cash, and there was also credit sales. And the amount there is 5025 000. Now I've dealt with my first question, and I can tick it off as done on my question paper. The second item is my purchases. Doesn't matter whether it's cash or credit, it's still fully deductible. And now importantly, I'll put the figure in brackets to indicate that I'm going to deduct the figure. And the figure is 3.5,87150. So I've dealt with my second item. The third item is my inventory. And that is on the 1st of March 2013, being my opening stock. Being opening stock, it means that I can deduct that figure. Also put that in brackets. So dealt with my opening stock. Then my closing inventory. So inventory as at 28 February 2014. Remember, closing inventory increases your profit, so I need to add it to my income. And I've dealt with that one. My fifth item is bad debts. Written off. And the amount is 119,000 Rand. So that's also in brackets. It's a deduction, and I can claim that. Item number 6 is my doubtful debts allowance. Doubtful debt allowance. And that was for 2013. Just ponder on this issue quickly. With a doubtful debt allowance granted in a previous year of assessment, you will have to add it back in the current year of assessment. Remember that in 2013, the taxpayer were entitled to claim the 12,500 doubtful debt allowance. It's now got to add it back for 2014. Item 7 stipulates that the list of doubtful debts as at 28 February 2014 is 93,800. That's just a list of doubtful debts. We now need to calculate the allowance that the taxpayer can claim, and that we calculate at 25% of the amount stipulated. So let's go and do that calculation. The doubtful debts allowance And that's for 2014. Sorry, that should be 2014. It's 25% times 93,800. And that works out to be 23,450 Rand, which is a deduction. So now I've dealt with both allowances, the one that was granted in 2013 and the one that I can claim for 2014. Item number 8, my personnel cost. Let's just first read what is given to us. There was personnel cost, salaries and wages, in brackets, as approved by the Commissioner, 650,000 Rand. So that's an expense which I can claim. I'm first going to deduct my salaries and wages. And that's the 650,000 Rand as a deduction. And then there's a second deduction. It says there, contributions to the pension fund on behalf of employees. The amount that was contributed by Lazy H was 125,850 Rand. The important thing that you need to note here, it's not for no reason that it was stipulated there, the salaries and wages as approved by the Commissioner. Remember, the Commissioner allows a 10% deduction for the employer for making contributions on behalf of the employees. So the actual deduction will be limited to 10% of the approved figure. So my pension fund contributions that I can deduct will be the figure of 650,000 times 10%. And I can only deduct 65,000 Rand for income tax purposes, although the company, however, has made a contribution of 125,850 Rands. So we've dealt with item number 9. Item number 8. Item number 9. Let's just move it here that we can read it, because that's important. On the 30th of April 2013, Lazy H received a letter from Kirk attorneys regarding alleged facial damages caused by one of the night creams to the upper cheek of Amy Kumalo, a supermodel for Paris on the Val. She's claiming 1.5 million for a loss of income from Lazy H CC. The case went to court, and Lazy H CC had to pay Amy 1 million Rand for a loss of income on the 31st of March 2014. At this point in time, I would like to quickly bring in the timeline. Remember, we spoke about the timeline earlier, and this is a good example of how the timeline will work. The timeline will represent my year of assessment. It will start on the 1st of March 2013, and it will end on 28th February 2014. And that period year represents my tax year. In item 9, it was stipulated there was a claim made by Amy Kumalo in the amount of 1.5 million Rand. There was a settlement reached, but payment was only made after my year of assessment, which is, let me just get the date here, 31 March 2014. You can clearly see that the payment was only made after the year of assessment. So there can be no amount claimable in the current year of assessment. So remember, when dealing with a tax issue that might have an impact in more than one year of assessment, it's much easier to plot the transaction on your timeline to exactly go and depict in which year of assessment do I need to address the specific issue. Going back to item 9, on my suggested solution, I will then go and address that. The loss of income. For 2014, there's no claim. Reason why, it was only paid in the beginning of the 2015 year of assessment. So therefore, I have addressed that issue appropriately. Let's move on to item number 10, which is my legal expenses. Legal expenses doesn't fall under general deduction formula, but under special deductions. So we need to have a look into the special circumstances surrounding that particular legal expense. The first item was the legal costs towards Amy Kumalo. Remember, that was a case that went to court. The court ordered the company to pay damages to Amy Kumalo, and the company incurred 6,000 Rand in terms of legal costs, and that will be fully deductible for income tax purposes. The next legal cost that was incurred was paid on behalf of Jenny Levine. Remember, she's the sole member of the closed corporation, and whenever the closed corporation were to pay any expenditure on behalf of its member, it's deemed to be private expenses, and it's not deductible in terms of the Income Tax Act. Section 23 will prohibit such a deduction. So therefore, it's non-deductible. And I put there an amount of 0. So now we've dealt with my legal cost. Note number 11 is advertising cost. Under my advertising cost, there's 2 items. You will note that I have highlighted the word vacant. The first item, cost of advertising vacant post in the Daily Informer. The company advertised for a vacant post in the company structures to fill it with an employee. Therefore, the Daily Informer, that expense will be fully deductible. And that is 3750. And I can claim that as an expense. The second item is the cost of erecting a billboard close to a local airport. Remember, a billboard is something of an enduring benefit or capital in nature. Therefore, it will not be claimable for income tax purposes. So I will write there my billboard. I will just write there enduring benefit. That's the reason. And I will put 0 there. Remember, in the exam, you could be asked to provide a reason why a particular deduction is not claimable for income tax purposes. Then you'll get the mark for providing the correct reason and not the fact that you've stated the figure is 0. Remember that, please. So now we've dealt with our advertising cost. Now we move on to the interesting part, the capital allowances. It stipulates there in note 12, Lazy H owns the following capital assets. Now we will deal with each capital asset separately. The first asset is a new cosmetic manufacturing machine D was purchased on the 31st of January, falls within my year of assessment, at a total cost of 300,000 Rand, and most importantly, it was brought into use on the same date. Therefore, being a manufacturing company, also being a small business corporation, Lazy HCC qualifies for 100% deduction on the purchase of machine D. So let's go and show you that calculation. Machine D, I'll show all my calculations in brackets, times 100%, and that equals a deduction of 300,000 Rand. So I've dealt with machine D. The second asset is a second-hand delivery vehicle. Stipulates there that the second-hand delivery vehicle was purchased on the 31st of July 2012. Let's move back to my timeline, which I've shown you earlier. The prior year of assessment would have started on the 1st of March 2012. The second-hand vehicle was purchased somewhere here on the 31st of July 2012. As you can all see, that represents the 2013 year of assessment, and this is the year of assessment I'm dealing with. So the asset was bought in the prior year of assessment, a second-hand motor vehicle, being a non-manufacturing asset, will qualify for a 50% deduction in the first year of assessment, which is 2013. And in my 2014 year of assessment, I will qualify for a 30% deduction on the purchase price of the vehicle. So let's move back to my solution. So my calculation will be, it's the 85,000 Rand purchase price of the vehicle times 30%. This is the second year of assessment that I can claim the asset, and that works out to be 25,500. So I've dealt with that issue. The third item is a manufacturing building, which was erected on the 30th of June 2010. So that was in my 2011 year of assessment and brought into use on 31st of August 2010 at a total cost of 1.25 million. The building houses the whole cosmetics manufacturing process of Lazy HCC. Now remember that it's a manufacturing building, so it qualifies for a 5% building allowance. It did stipulate when the asset was purchased, when it was brought into use. So it was purchased and brought into use in the prior year of assessment, which means that I have to deal with the current year of assessment's deduction that I can still claim on the building. So the building allowance will be calculated as 1.25 million times 5%, and that works out to be 62,500 Rand. Just to make sure that I've addressed all the capital allowance issues, yes, we did, so we can tick off item number 12. We now move on to item number 13. And this is a very nice one to deal with. Lazy H sold technologically outdated manufacturing machine Z for 20,000 Rand. It was originally bought second-hand on 30th April 2010. In other words, in my 2011 year of assessment for 100,000 Rand and brought into use on the same date. Now I need to explain to you something regarding a recoupment. Remember, it's a small business corporation. We are dealing with a manufacturing equipment. Doesn't matter that it's second-hand. In the year that the manufacturing equipment was purchased, the company was entitled to a 100% deduction on the purchase price of that piece of equipment. Now it's disposing of the equipment 3-4 tax years down the line in 2014. So the recoupment needs to be calculated as well as the tax value of the assets. We'll now proceed to calculate the tax value first to determine whether there's any recoupment or not for income tax purposes. Remember, you don't have to deal with the capital gains tax issues, only income tax issues. So let's first do the calculation towards the tax value. Machine Z, the cost price originally, and now you will see I'll use column number 1, was 100,000 Rand. My section 12E allowance in the 2011 year of assessment would have been 100,000 times 100%, which equals 100,000 Rand. So the tax value of my asset is 0. Okay, I'll just put the paper a little bit up, you can see. The selling price is 20,000 Rand. That's provided. So my recoupment is the difference between my selling price and the tax value. In this instance, my recoupment is 20%. This is not where the calculation stops. You've calculated your recoupment, but it's now important that you transfer that figure into the last column. So my 20,000 is indicated as income, which represents my recoupment on the selling of machine D. So that deals with item number 11. So now we move on to item number 14. On my question, it stipulates there, the following costs were incurred relating to trademarks. The first one is a renewal. I've highlighted that. And when, on the 15th of April, the company has paid 8,500 Rand towards a renewal of a trademark. It also purchased a new trademark on the 31st of January 2014. Both transactions falls within the year of assessment. However, I need to explain to you that only the renewal of the trademark will be claimable, as the purchase of a new trademark is capital in nature and you cannot claim that. So my renewal fee is claimable, and that is 8,500 Rand, and I'll show it in brackets. The new trademark, there's no deduction for that, so the amount will be 0. And I've dealt with item number 14. I only got 2 items left in our question. Item number 15, Lazy HCC entered into an agreement with Tommy Strong, a former chemical researcher, on the 31st of October. So during the year of assessment, in brackets, the date on which he resigned, and paid him an amount of 312,000 Rand as a restraint of trade payment for a period of 4 years. Crucial information. The 312,000 was paid on the 15th of November. It falls still within my year of assessment, and the full amount was taxable in the hands of Tommy for the 2014 year of assessment. The important thing that you must understand with a restraint of trade payment, to the extent that the amount that was payable by the company towards the recipient will be taxable in the hands of the recipient, will the company making the payment be able to claim that as a deduction. However, the full amount is not claimable in the year that you've paid it. There's a special rule that applies there. A special rule that applies here, you will claim it either over a period of 3 years or 1/3 of the amount, or the actual period if that's exceeding the 3-year period. In this instance, the contract was for a period of 4 years. Therefore, item number 15, my restraint of trade payment will be limited, and I'll show my calculation, the 312,000 Rand divided by 4, and that equates to 78,000 Rand. It's very important that you do show that calculation there, because you will get a mark, for instance, for that, a principal mark. Right. Now we've come to the last item, which is my donations. Being a donation, at this point in time, I need to warn you that your donation, in this case is Section 18A deduction, will be the last deduction that you can claim. In order to do that, you need to calculate a subtotal, because there's a percentage that you apply to that figure, which is the maximum amount that the taxpayer can claim. So I'm just going to calculate my subtotal here before I calculate the final deduction, which is 618,650. And I'll indicate there it's a subtotal. The Act makes provision for a deduction of 10% of the amount of your taxable income prior to the donation, provided that it does not exceed the actual amount. Let's just read what was donated. Lazy H donated 15,000 on the 15th of December 2013 within my year of assessment to Ladies in Blue, a public benefit organization uplifting women in the rural areas. The necessary Section 18A income tax certificate was received on the 17th of January 2014, which means that the company can claim this specific expense. Important, you need to show your calculation regarding your donation. So the maximum will be, it will be limited to 10% times my subtotal 618,650 rands, and that equals 61865. But remember, the company did not donate at 61,000 rand. It only calculates the maximum amount he could have claimed if he had made donations in excess of that. So for our example, question number 3, you can only claim the actual amount of 15,000 rand. And then I'm done. So I need to calculate my taxable income, and that is 603,650, and I'll write there taxable income for 2014. We're done with the question. As you would have picked up, I followed a certain procedure in terms of first planning my answer, went back, read the information, and carefully addresses all that information in answering my question. For the purpose of this question, I've used the numbering system that was used in the layout of the question. For example, 1 was the sales and 16 the donations, just for explanatory purposes. In the exam, it's also important that you have a structured approach in answering a question of this nature. It will focus your attention to all the issues, using the timeline effectively, especially where a transaction spans more than 1 year of assessment. It's important that you understand where and how do I calculate which deduction, where does it apply. I trust that the walkthrough through question 3 will enable you to address any similar question in exam conditions.